Hello everyone, Darren at Leviathan here, talking to you from the CME trading floor as we await the start of the World Cup. But before that, some latest news and an update for you for what's going on around the market. That's the first thing. So, fairly hot off the press. Seems like I don't know. It depends who you listen to. President Trump has claimed the agreement was close, or is close, and yeah, we wait and see on that. Oil was unchanged, is now down $2.38. This came out about 20 minutes ago across the tapes. This caused the S&P to rally hard. We're up 1%. 73.58, and also we've had a rally in fixed income. 10-year back down below 4.5%, and the SOFR market is rallied up to 10. So basically, just pretty much just fully pricing in one hike for the year end. And moderately a little bit. Maybe it's like a 2% chance of two hikes now. So things are looking rosy there. Again, though, I did want to do a little Chat GPT versus Leviathan, to give you an example. And we were looking at downside trades in the S&P, which could come about regardless of whether or not there's a peace accord with Iran, because that inflationary risk is still there. You know, that things have been put into place, and we may still end up having to raise rates anyway. So we were looking at a potential pullback in the market. We'll get rid of that. As you can see on my Bloomberg chart, we're floating with this support line here. We could quite easily go back down to at least retest the 6,500 area if broken. So we were just looking at that suggestion. And what did ChatGPT come up with? Well, its preferred trade wasn't actually, its logic wasn't too bad. It liked put spreads, but it was looking at a 6,900, 6,500 put spread. Now, we at Leviathan look at risk and reward. How much are you investing and paying? What can bring you back as a return? And which is the best trade to do? Now, if we look at ChatGPT's suggestion here, the problem with this trade, although we like put spreads, is that it's worth $85 bloody dollars. So your $1,000 isn't going to go very far, and you're risking that entire amount. So to bring you back, yes, it can bring you a pretty good return, but the idea is to keep you in the game with less risk involved in your trade. And this is something that the standard AI platforms don't seem to get. And to give you a further example of here, his second trade to suggest was buying this put ratio spread. Fuck no, is all I can say to that. It is the dumbest trade idea to suggest to a member of the public to do that I can think of. Because if something bad does happen, or even if we go down to this level, you get to the 6,400 area, as we've seen with every other guy that suggests on the internet and here and even ChatGPT, these trades look great on expiration. But let's go back and let's see, hang on, where is it? What that would look like on a heat map. So Let's see. D26. Oh, sorry, we're in the wrong product. So S&P, and I will show you exactly why this is. So anyway, so these will go 6,400, 6,800, put 1/2. Right. Now, let's just focus on the heat map of this trade. Yes, you can make a lot of money if you're right and it hits a strike. But look at these. Look at this. You will lose everything if you do this trade and we go down there quickly. And this doesn't even account for what would happen to volatility if you get down there. So yeah, it looks great here, but you will get carried out. And every guy I see on the internet, these are the suggested trades they do. They don't look at your downside, and that's what you need to be looking at. And so, without further ado, well, you're going to say, well, what is a good trade then? So, what we like, so just go back and have a look at it. Here for December, let's go vanilla. It did like put spreads, but suggested we go a little bit higher, a little bit cheaper. This is $9.86. That will be your downside to this trade. It allows you to participate in more contracts. You can do 202 of these for every $1,000 that you have. And just look at the comparable heat map. A lot more green, monetizes quickly, and your downside is only that. And if you're wrong, it allows you opportunities to get out a lot cheaper and play the next game. And that's what it's all about, keep you in the game. So it like that put spread. I would like to mention as well, we did a run for September, and there's some really good returns here. If you think if it does turn around, it's going to happen sooner rather than later. Similar trades, though, it also did like put spreads, to be fair, to ChatGPT, but they much prefer, these are better trades to do. This one here, 6, 7, 50, 60, 100 put spread, there's $6. If you're right on that, even if you don't run it all the way, you're still going to make a 600% return if that comes to fruition. Let's see, apart from that, just hitting the wires now. Iranian foreign minister may travel to Pakistan Saturday. So, you know, I know that it looks like they're both sides just really want something to happen. Although, you know, it's on one side you have this would be, in fact, according to Iran, the 38th time that Trump has said that a deal is imminent. And while they say it's not the case, but it does feel like the oil market is saying, yeah, nah, we're kind of leaning more towards Trump at the moment. The fact that it was at most, it rallied up to unchanged today, but it's been languishing between $1 and $2 down on the day. We're now down $2.70, back down to the 87 handle. Other than that, again, we've been asked for a couple of trades in SOFR for potential unchanged. What happens if they don't do anything? And again, we've seen similar ideas of trades which suck. And so we're going to suggest some alternatives for you. We like this call fly, the 9631 quarter, or as we refer it, the 62 plus, 63 plus, 65 plus call fly at 3/4. It has a lovely heat map, and on the upside, and will monetize fairly well on a rally. Not great. You want it nearer the time of exploration. But if that's the way we go, you're looking at a grind higher bit. It SOFR can get very sticky if that's basically where we are looking like heading. That will monetize a lot sooner than here, just on volatility. Now, if you wanted to go shorter term, there are slightly higher returns, but not too much. But this one's not bad. At 1.25, if you can get hold of that. It's the 62 plus 65, 67, sorry, 66 plus call fly. These are the strikes for long-handed people. This one's also cheap, and this one will monetize pretty quick. A short-term rally in rates, will see this one kick in a lot sooner. So I actually like this one quite a bit for unchanged rates. You can see here how quickly it goes, and what you can make out of it if you're right. So if you like shorter term upside plays for SOFR, short term interest rates, I think this is the one to do. I like that one a lot. So there you go. So a couple of good plays for you there. Anyway, I'm going to go watch the rest of the opening ceremony. I hope, as I always say, better be lucky than be good. So good luck to you all, and have a great day trading.